Well, after 2 years of contraction, private equity and venture capital investments in India recovered in 2024, rebounding 9% year-on-year to reach about $43 billion. Now, this resurgence was primarily driven by VC and growth investments, while private equity deal-making held steady, according to a Bain-IVCA report. Now, VC and growth investments surged 40% to nearly $14 billion, and that was fueled by a sharp rise in deal volumes. India also strengthened its position as the Asia-Pacific region's second largest PEVC destination with a 20% share of the total investments. For more such insights from the report, joining me now are Padmanabh Sinha, former chairperson IVCA and managing partner and co-founder at LaunchPay Capital, as well as Aditya Shukla, partner Bain&Company. Gentlemen, thank you very much for your time here on CNBC-TV18. Aditya, to start with you, venture capital growth investments surging 40% last year. What were the key triggers, and will this trend sustain in 2025, you think?
Thanks, Ritu, for having me here. So look, I think it's been a very strong secular trend that we've seen on the VC and the growth equity investment side. Last year was 40%, but even the years prior to that, we've seen strong growth. I think our view is that broadly, if you look at the startup and the growth equity ecosystem, the macro still continues to hold true. There are a bunch of policy reforms which have also helped the market. And there are some, fantastic companies and entrepreneurs, both in the VC and the growth equity space across different sectors, whether it's consumer, whether it's manufacturing, whether it's healthcare. So they've managed to attract, capital from different funds. So in our perspective, I think that is a trend that is here to stay and that should continue.
All right, you expect that trend to stay, but Padmanabh, India achieved record domestic fundraising as well, despite what's going on globally in terms of private equity headwinds. What made the India market resilient, and also what happens now? How will global sentiment shift towards India in light of the conflict that we're seeing?
Thank you, Ritu. As you said, the local investor base in India is now emerging as a high growth segment, albeit from a very low base. So historically, unlike countries like China, India didn't have much of a local investor base. What we are seeing is new institutions emerging. They are the ones like NIF and SIDBI. They are sort of life insurance companies, some fund of funds, and family offices, which are increasingly taking greater interest in alternatives on its asset class, which is good because they were highly underrepresented amongst Indian investors. And I think you'll continue to see that grow from a low base, particularly the more sophisticated institutional investor base grow as they seek to diversify their assets beyond traditional fixed income, public markets, etc. On the international front, I don't think hopefully the current issues are temporary. They don't matter. Private equity tends to be a very long-term asset class.
Okay. So private equity will take a long-term view and not be impacted by the current conflict. But Aditya, buyouts accounting for over half of the PE deal value. Does that to you signal a long-term shift in the fund's strategy towards control deals? Or, how do you think this might impact asset pricing and competition?
No, I think it's, I think buyouts will continue to be an important part of the market. I think part of this is that you do have growing investor confidence in the Indian market, right? And as that continues to evolve, you do have quality assets that are available from a buyout perspective. One is, I think, buyout funds have also raised larger funds either for India or, as Padmanabh mentioned, a large part of their APAC capital raising has been also deployed in India. So the dry powder exists.
Sure. Padmanabh, quickly, with public market exits also rising to 59% of exit value as per your report, and IPOs, of course, gaining traction, how does one ensure this momentum remains a reliable exit path for investors from a stakeholder and a regulatory point of view?
A good point. Good question, Ritu. I think capital markets by their nature tend to be cyclical, and I don't think one should assume the resilient strategy would be to have a good mix of exit options between capital markets, trade sales, which is sales really to financial investors and other private equity investors, and strategic sales. And historically, actually, India has been fairly balanced between the three modes of exit. Of course, some of the larger deals have been exited off capital markets, either through IPOs or post. But there's bound to be some changes on that front. In fact, in this financial year itself, one of my former portfolio companies, Ather, has just broken the IPO jinx by being the first IPO of this financial year. So I don't think you'll see the same level of activity that you had on the IPO markets last year.
Yeah, well, that is always the case. But Aditya, quickly, the report highlighting aging assets, slower exit cycles for large buyouts. How are funds coping with internal return pressures, and what strategies could we see in response?
So, look, I think great question, Ritu. I think, and this is why you are seeing a surge in the exit volumes, right? I think there is, if you look at priorities for a lot of the funds, especially of the older vintages, I think there is a priority to exit. Right. I think the good thing is that the Indian market now in the last 3 or 4 years has shown that we do have a very robust ecosystem, and which is the reason why you are seeing exit surge across, right? Public markets obviously last year was 60%, but even if I look at strategic sales or sponsor to sponsor sales, I think that's also been a significant part of the market. So for a lot of the funds, I think as you rightly said, they are focused on individual companies. A lot of them are actually starting that entire kind of exit or the pre-IPO process a little earlier. So definitely remains a priority, and I think it is good for the ecosystem. As you see more exits, there will be more investor confidence, and as newer funds come up and raise more capital for India, one of the big things that they really see is, has this market provided exits for the other investors? And that answer is.
Well, yes, finally, since we're running out of time, Padmanabh, very briefly, when you look at 2025, we're 1 quarter in, what do you expect to be the big themes, the big sectors? What will you watch out for in terms of private equity and venture capital trends in India?
Sure. Ritu, as I mentioned earlier, we in private equity are used to seeing long-term beyond a quarter and a year. So I can tell you what I read of like 3-year trends based on current knowledge. So the first point I would say is India is definitely becoming a much more sophisticated and diverse market. So if you see from the Bain report itself, you have more than $40 billion of investments, more than $30 billion of sales or exits. So what's happening is across the various categories, venture, growth, buyouts, you're seeing greater size and scale in India. And that allows sophisticated players which are segmented, which focus on either venture or growth or buyouts to emerge, which is great news. One last point on your previous question on exits. There's a new sort of form of exits, which is in the form of secondary funds, which is also emerging, in addition to the exits that are already there. So there are funds which are focused on providing exit or liquidity to existing private equity investors as well, and that's an additional form of exits that's emerging in India.
All right, it is